Welcome back to the final segment of Investing with Confidence, sponsored by Online Trading Academy. I am Josh Lilquist, and we are talking about the markets here today: stocks, options, futures, Forex, talking about the do's and the don'ts of the financial markets and helping you make smart investing decisions. Don't forget to subscribe to our podcast if you miss part of the show. Anywhere you listen to podcasts, Investing with Confidence on Apple Podcast, iHeartRadio, and Spotify. So in that last segment, we were talking about different strategies for people that are planning to retire or that have just retired. And we had investing class tickets that we gave away. And we had a lot of people text in for this investing class. So text right now. Text the word investing to the number 210 210 for two of these tickets. That's text investing to the number 210 210. When you do that, you're going to receive a text back to pick the day that makes sense for your schedule. We have several classes per week, and these classes are free, and they're about 2 hours. I teach these. Al, you teach these as well. And we have a great time talking about the markets. Now, I just want to talk about something here that I'm going to talk about a little story about baseball. It's baseball season. I love baseball, and it seems always like the hitters. You always feel like they always have to hit a home run or they always have to get on base. But if you think about it, in sports, especially baseball, to be in the Hall of Fame, most people are around a 300 average
Right.
hitter, which is 3 out of 10 times they get on base, which doesn't seem that good. But that's an average. That's actually really good for baseball. Well, that's very similar to the financial markets. A lot of people think you have to hit a home run every single trade or investment. That's not how you build longevity. How you do that? Singles, doubles, triples, and the occasional home run. But doing that consistently,
Correct.
30, like in baseball, 300 hitter, 30%. Well, 30%, 40% is actually good in the financial markets because when you have proper capital management, you don't have to be right all the time. And as we were talking about in that last segment, how to take smaller amounts of capital, not having to be right every single time. Al, I want you to explain that in layman's terms on how that actually happens and how people can make smart investing decisions and not even have to be right every time.
Well, that's a great point because I think a lot of what keeps a lot of people out of the market is fear of losing. What if I'm wrong? What if I lose? You know what? You're going to. Does Warren Buffett ever lose? Absolutely. Does Goldman Sachs ever lose? Absolutely. Uh, Everybody will have losses. There is nobody that is going to be 100% in the financial markets. But the great thing is you do not have to be. You don't even have to be right half the time. When we teach our students, we teach you what is the most important ratio in investing, and that is your reward to risk. And as long as you have the right reward to risk ratio, and we teach this in this class, you can actually be wrong 75% of the time and break even. That gives you a lot of comfort. I think, our goal is, of course, not to teach you how to be wrong 75% of the time, but just to point out how important it is to concentrate on that reward to risk ratio. Identify investments and identify entry positions that are going to give you that potential to have what we call a 3-to-1 minimum of a 3-to-1 reward to risk ratio. But we'll show you, we'll talk to you about that in this class. That gives you the opportunity to be able to have multiple positions, knowing that you don't have to be right with every one of them, but part of being successful is knowing how to manage the risk part of it. And that's the number one thing we teach you, how to manage that. And then with the leveraged assets, and this is one of the reasons that the big institutions use them and why hedge funds are so successful. They use these leveraged assets, which gives them the opportunity to have every dollar, as I mentioned earlier, control a much larger investment. And what it means for us is that we can have a small account. It may, even if you have $1 million or $2 or $3 million, maybe you're reluctant to put all of that in the market, and you should be. But what about taking a small amount, as Josh mentioned, maybe 10,000 or 20,000 or whatever feels comfortable for you, but having the opportunity with that small account, maybe a $2,000 or $3,000 account could give you the opportunity to control $50,000 to $100,000 investment. That's what gives you maximum usage out of your investment dollars and gives you the opportunity to have potentially great returns with small amounts of money. It also allows people that don't have a lot of money to participate in things that they might not be able to have that same opportunity with in the stock market. Stocks are great for long-term wealth buildup, but if you're looking for putting a portfolio together and you have a minimum or just kind of a restricted amount of money, it's pretty tough to put together multiple positions when you have a lot of these companies that are trading well over $100, maybe into the thousands of dollars a share. That's pretty tough. But using these leveraged assets, you can still participate with them with a much smaller amount of money. And I know that may sound a little confusing to you. Come into the classes and let us show you how that works. This is really how to potentially get the greatest benefit out of these markets. And if you're not using these leveraged assets, which your financial advisor is probably not talking to you about, you're missing out on some great opportunities, not only to have better returns in an up market or potentially better returns in an up market, but what about a down market? How are you doing when the market is crashing or when the market is flat? If you're missing out on opportunities to benefit you in those two directions, you're only participating in one out of three. You're leaving a lot on the table, so to speak. So let us show you how to participate, how you can benefit regardless of what direction the market's going, regardless of what the market is doing. There are opportunities. We can always find a bull market somewhere.
Yeah, you're right. There's just opportunities. That's the key. And I think you said that a few times here is there's so much opportunity in the markets, and it's not new. It's just a little bit different. And you just have to learn these techniques and strategies, what they are, how to make smart investing decisions, but how to do that today. It's not like tomorrow or the next day. Learn how to do that today and execute today. Text the word investing to see what those strategies are to the number 210-210. That's text the word investing to the number 210-210. And this is for a free investing class at our local academies at Online Trading Academy. Investing to the number 210-210. So as I was talking about that baseball story, you don't have to be right every single time. You were kind of getting into how to use that strategy and have that for income strategies with these different markets. But also, a lot of people say, well, when you have leverage with these other assets, futures, Forex, and options, they're probably thinking, well, isn't it a double-edged sword? Well, kind of. But what do we talk about every single week? Protecting your positions and keeping that risk small for higher reward. And that is why, as Al was talking about with the ratio, you do not have to be right every single time. And that's the key, is to do that. And you need a strategy that's designed to do that. So, Al, we've been talking a lot about this investing class, and we've inspired a lot of people. We've had a lot of people text in for this investing class, which is phenomenal. People are taking that first step. But I want to make sure that, the rest of the people that haven't texted in yet on this show, that they understand what they're going to be learning at these classes. So, Al, you teach a lot of these classes. What can people expect to learn when they come to this investing class?
Well, number one, how does the market function? What makes price move? Who's making it move, and how can we take advantage of that? That's what we talk to you about. Our investment strategy, our core strategy, is designed to do that. It's simple. It's just following the people that are successful. And doesn't that make sense to be able to do that? There are a lot of people out there that have gone through the trials and the errors, and they can help you. These are instructors. They can help you to maybe eliminate some of those mistakes. And let's just concentrate on what's beneficial for you. Let's look at what factually is important, because there's a lot. I mean, you can go to the library or Barnes and Noble. You could read books for the rest of your life on different strategies. And when you get down to it, the only real important thing is when price is going to move and how far is it going to go. Those are the two things that are critical. That's what we want to teach you. Let's keep this simple. That the platform that Josh talked about, the Click platform, not only will it help you put together positions that are high quality positions, but how often does a broker call you and tell you not to do something? Click does. If you try to put together a position on the Click platform that is not beneficial to you based on your individual, the parameters you put into Click, because you will customize it, it's going to tell you, don't do this trade. That's a huge benefit to you. But look, these opportunities that we're seeing now, you may not see these for some time. This is the time to be active. This is the time to learn how to take advantage of what's out there, because the market is just presenting these gifts to us on a regular basis.
Yeah, I just want to talk about something here. I want to make sure our listeners understand. We're talking about learning these techniques and learning these strategies. A lot of people think about learning is associated with time. How much time is it going to take for me to learn something, right? Now, you're never going to know unless you go and try to find out, right? It's only 2 hours of your time to learn what these techniques and strategies are. 2 hours of your time. Is your financial future, is that worth it? That's what you got to think about. I have these tickets for this investing class. Text the word investing to the number 210 to see what these strategies are. Hopefully that'll help you make smarter investing decisions starting today. Al, we talk about different techniques and strategies every single week, and you always bring some good stuff for our listeners, and we all appreciate it. But you always also have that OTA tip of the week. Today, let's hear it.
Well, you kind of hit on something there when you were talking about could this be too much work, to take too much time? Look, success in anything, especially in finances, shouldn't be easy. If it was easy, it would just be average. Success is a product of hard work. It's focusing on what's important. It's perseverance. Those behaviors aren't average. If you want success, you can't get there with average behaviors. It's small, positive choices over time that end up creating big successes. It's not about fast results or instant gratification. It's about following a process that builds habits that can create those big successes.
One of my mentors said, you don't have to be great to start, but you have to start to be great. These investing classes, they're 2 hours of your time. Text the word investing to the number 210 for 2 free tickets at Online Trading Academy. Text the word investing to the number 210. Always, don't forget to subscribe to the podcast, Apple Podcasts, iHeartRadio, and Spotify if you did miss part of the show. Same time, same place. Next week, we're going to talk about all the different techniques and strategies on the stock market. Until then, retire young, my friends.